With the market going up and down a lot lately, it's important to pay close attention to great deals out there. And LTC stock is an interesting case. The stock itself is up 5% year to date, which is kinda surprising because the recent earnings weren't that spectacular. And it is expected to hit another miss later this month on the next earnings. But the real reason why investors seem to like LTC stock is because of that juicy 6.5% dividend yield that pays out every month. So without further ado, let's dive into the recent earnings and do a full analysis on the stock. So right off the bat we see that revenue was reported at 52 million, up roughly 4% year over year. Both the net income and net income per share are down significantly. But taking a look at the more detailed version, we see that there was a gain on sale of real estate last year, heavily diluting last year's numbers. The good part is that one of the most important numbers, FFO, is reported at $0.72 per share, up quite a decent amount year over year. The diluted FFO is more or less flat year over year. Another really important number to me is the net to debt EBITDA, which is reported at 4.2 times in 2024, looking pretty decent. I prefer a range of 5 to 6.5 usually, but with this type of company I don't mind being a bit on the lower side here. LTC is still doing a lot of investments, which should help the company to grow, which is a good sign in my opinion in general. But keep in mind that in 2024 growth was slowing down a little bit versus 2023. In total there are 30 operators across 25 states and 190 properties. And LTC focuses on assisted living and skilled nursing properties. The biggest operator is Prestige Healthcare with a total of 16% annualized cash. I prefer a maximum of 10% here. But since this is a much smaller company, I'm not worried that much. So the diversification is something to keep our eye on in the coming years. Occupancy rate is something that is keeping me away from this sector in a lot of cases. And as of right now, it is reported at high 70s to low 80s. And I prefer at least 85%, and in most cases I'm leaning more towards the 90%. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. LTC is a 1.6 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. And right now it is sitting at nearly 12.5, indicating they might be undervalued. Later in this video I will show you my 3 price targets for LTC stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 209 million, and in this graph we see that revenue went up in the long run. To me this looks really good, especially for a REIT. The only thing is that during the lockdown periods revenue was slowing down a lot. We see that margins are going up and down quite a lot in the recent years, but the trend line is a bit more downwards, which is something that I don't like. Definitely keep an eye on this number. EPS is pretty much the same story as the margins, so keep an eye on this number as well. Analysis expected in the coming years EPS will decrease even further. To me, this also doesn't look good. For the revenue, it is not looking any better, with expected decreases in the coming years as well. Return on assets is sitting at 5%, which is a decent number for this type of REIT. Return on equity is looking pretty good at 9%. And the most important number, return on invested capital, is sitting at 5%, which is again a decent number. It is slightly higher versus the 5-year average, so that's the silver lining here. Current ratio is at 9, which is way too high in my opinion. This is definitely something to keep your eye on, because you want this number in the range of 1 to 3. Lucky for us, it is decreasing drastically most recently. And right now LTC has 684 million in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. LTC has 9 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like, especially in combination with the current ratio. Total debt to equity looks pretty good, nothing really special to add here. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 6.43%, which is a great number. Annual payout is at $2.28 and payout ratio is at 86%, which is above the 75% average for REITs. And there are no consecutive years of dividend increases. And that's also reflected in this graph, where there is no dividend growth anymore since 2017. To me, this is not a good sign. In this graph we see the expected dividends in 2025, 2026 and 2027. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to stay more or less flat from here as well. But overall these dividends look really interesting to me. But how about the historical returns? I decided to compare LTC stock with the overall market, in this case the S&P 500. On the 5-year chart we see that LTC returned 77%, which is still significantly lower versus the S&P 500, who returned 134%. And keep in mind this is including dividends. On the 1-year chart it does look very good for LTC, with a whopping 17% return, crushing the S&P 500 with double the amount. On the 6-month chart it is more or less a tie between the two. On the 1-month chart it is again LTC who's beating the S&P 500 with a big difference. So bottom line, LTC underperformed the S&P 500 in the long run, but in the short run it is looking pretty interesting. So could this be the perfect time to buy LTC stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with the revenue growth. For the revenue growth I'm filling in 3, 5 and 7%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 40, 43 and 46%. And for the free cash flow margin I'm putting in 58, 60 and 62. For the PE ratio I'm putting in 20 and for the price to free cash flow I'm putting in 11, 13 and 15. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. And right now LTC stock is around $35. I hit analyze and we see a lot of green numbers. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $28, we have a mid price target of $36 and we have a high price target of $46. To me, the low to mid price target is the most justified here, indicating that this stock is kinda fairly valued. And keep in mind, we still expect decent growth numbers in these scenarios. Which price target do you think is the most justified here? Let me know in the comments down below. My final conclusion on LTC stock is that it is an interesting company. I think the niche focus they have could be interesting. But as we have seen with most medical REITs, it's a tough industry. Margins are decreasing and growth isn't really there. However, most fundamentals look pretty good. But both the current ratio in combination with debts are a big red flag to me. From a dividend point of view, I do get a bit excited. The yield is great, payout ratio is a bit on the higher side, but nothing that worries me a lot here. However, there is no growth, and that's the thing that worries me the most. From a value point of view, things also look pretty interesting. In my opinion, the stock is fairly valued, but it could be an interesting play if the stock price comes down. For now, I'm skipping this stock and keep analyzing them from time to time. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.